Welcome everyone to the Watchlist. Sorry for the slight delay. As you know, the Watchlist is a webinar series for ASX listed companies to pitch to real investors such as yourselves so they can be considered for your watchlist. Our job is to showcase companies that are on your watchlist or to give you ideas of companies you might want to put on your watchlist. And looking at the size of the group who are here today watching, clearly a number of these companies are on your watchlist or about to be. We've found three cracking resource companies to present today, and they are Killi Resources, ASX code KLI, Altech Batteries, ASX code ATC, and Forrestania Resources, ASX code FRS. Remember, the webinar is interactive. We want you to ask questions of the presenters. So while they are presenting, think up some questions and submit them using the Q&A button at the bottom of your screen. Now, I'd like to introduce the first of our company presenters, Kathryn Cutler, CEO of Killi Resources, ASX code KLI. Killi recently announced an option and joint venture agreement with a subsidiary of Goldfields, who has agreed to spend up to $13 million to earn an 85% interest in the company's West Hannaford project, located in the Kimberley region of Western Australia. To tell us more about the deal and how, with this deal now done, Killi will focus exploration at the Mount Rawdon West project in Queensland, where the company will continue to explore in 2024 for a new copper-gold system near Bundaberg. Thanks, Kath.
Thanks, David. And thanks everyone for tuning in this morning to hear an update on Killi. If you aren't aware of us, we're a junior exploration company and we're focused on exploring for a new copper-gold deposit in Queensland. The last 6 months, we've been building our targets at the Mount Rawdon West project. As the name would suggest, we're in an area close in proximity to the Mount Rawdon gold mine, which is the 2 million ounce gold system inland from Bundaberg. We've generated two really exciting looking gold copper porphyry epithermal targets to date. And I'll walk you through what they look like and what the company's exploration plans are for the next 6 months. So we can go to the next slide, David. Through the disclaimer, I'll let you read that at your own time. And through to our corporate structure. So currently our market cap's reasonably small, around 5 million. Our shares are around 5 cents. We've only got 120 million shares on issue, and our top 20 shareholders hold around 45% of the company. Goldfields has recently entered into the company as well in relation to the joint venture, which David just mentioned, over our West Hannaford project, gold project up in the Kimberley region of Western Australia. We've got 4 assets in Australia with exploration currently and for the foreseeable future, focused on the Mount Rawdon West and Ravenswood North projects in Queensland. So we go to our next slide, please. This is just a small synopsis on the West Hannaford project. So just briefly, I'll mention the JV deal we did with Goldfields, which we signed 4 weeks ago. The company holds a large position, about 1,600 square kilometres of tenure, at the western end of the Hannaford fault belt. It's a long strike from about 20 million ounces of gold endowment, sitting mainly on the Northern Territory side of the WA-NT border. Goldfields has entered into a 2-staged agreement with Killi to earn a maximum 85% interest in the project by spending $13 million. It's a good deal for Killi as we remain leveraged to a new gold discovery in the Hannaford, which is a definite positive. Let's go to our next slide. We're going to move over to Queensland here, and our main focus is the Mount Rawdon West Copper Gold Project. Now, it's located between Mount Morgans, Krakow, Gympie, which is some 20 million ounces of gold endowment, and they're porphyry epithermal copper gold systems. Also in the mix there is the Mount Rawdon 2 million ounce system, which is an intrusive related gold project. What we're looking for, if we move to the next slide, please, is we're looking for a whole new system. We're looking for a system of similar size and scale to that of the other systems in the region, such as Krakow and Mount Morgans. They're generally large tonnage, low grade, and they have a long mine life. We know we're in the right area because we're already have these existing deposits nearby and this style is already present. We'll be building the targets by putting together layers of geochemistry, geophysics, and geology. Of note, I've just put down the bottom there, IP survey was an instrumental method in finding Cadia. So one of the most famous porphyry copper gold systems on the east coast of Australia is Cadia, and that was found by copper gold mineralisation found at surface. An IP survey was completed, and the IP survey generated an IP anomaly at depth. This was then drilled, and that drill hole became the discovery hole for the deposit. So we're going to follow that general principle of exploration, looking for these styles of systems. Go to the next slide. So this is our project. This is the Mount Rawdon West project. This slide here outlines about 300 square kilometre tenement package. The gold mineralisation corridor extends through the tenement from the southeast to the northwest, from the Mount Rawdon gold mine in the southeast. Perpendicular to that, there's a copper gold corridor that extends across the project from the Nichols Reward area which is owned and operated by SolGold, through to the New Moonta area, which is a historical copper gold area for mining. Fieldwork to date has determined 2 copper gold molly soil anomalies referred to as Car and Baloo, which this also included at surface 7.2% copper and 12.4 grams per tonne gold in rock chip samples. I draw your attention also to the tenement there. The Mount Perry, the historical Mount Perry copper gold silver mine, as well as an old copper mine called the Woomba Hill Mine, and molybdenum mines are also located on the tenement. Can we go to the next slide, please? This is zooming in onto the 2 targets specifically in the centre of the tenement package. So Car is a 1.8 kilometre long by 400 metre wide geochemical anomaly. It aligns with the old Woomba copper mine, which was from around 1907, which is located at the top of the hill. Processing of the geophysics, historical geophysical surveys completed, identified a VTEM anomaly, which coincides with the geochemical anomaly. And importantly, there's not one single drill hole at that target whatsoever. So it's never been tested and remains open as a new copper gold discovery potential. Baloo is the second target, which is even larger. The geochemical footprint's even larger. It's 2.5 kilometres by 1.5 kilometres. It also has an aligned VTEM anomaly determined from geophysics. There are old workings present, and likewise, it also doesn't have any drilling to date at the target. So all indications so far is that we have a very fertile potential porphyry epithermal system, and that remains our exploration focus for the company. We go to the next slide. So these next 2 slides zoom in a little bit closer and go through more of the geological detail for Car and for Baloo, which I will let you go through at your own pace as we are limited by time. So if we go through to slide next one and the next one, this is more importantly the exploration plan we have for these 2 targets. So the plan is mapping and further geochemistry will be completed, which we've already started. We put that announcement out last week. In conjunction with that, we're going to start a induced polarisation survey, or an IP survey. The IP survey will determine any sulphide-bearing units beneath the geochemical anomalies, and those results from the IP will then provide a drilling target for the company to test. The maiden drill campaign will follow on from those IP results. And in the bottom corner there on the left, that's just a small schematic across the Baloo anomaly. There's the copper gold anomaly sits on top of a rather large hill range, which is 1.5 odd k's wide. On the flanks of that is anomalous moly, as well as on the northern edge is the VTEM anomaly. The IP survey should extend down to around 300 odd metres depth and determine any sulphide-bearing bodies beneath that hill. Those results then will provide a drill target for the company in the coming months. We go to the next slide. Our Ravenswood North project is our second project in Queensland and our second focus. The next 3 slides cover this project, which I won't go through in too much detail, again, because of restraints in timing. But we're within the Charters Towers region. There's about 28 million ounces of gold endowment within 60 kilometres of the project. We have around 660 square kilometres of tenure, prospective for copper and gold, and we've determined 2 targets to date. Our first target was Rocky. So if we go to our next slide, Rocky is a 1.5 kilometre squared gold silver target. That was in geochemical soils. We'll determine that target to start with. The first 11 drill holes have been completed into that target and returned 10 metres at 0.66 grams per tonne gold, which are reasonably good first pass results for such a large system. The second target we have is the next slide along, is West Branch. This is in its infancy. To date, only surface rock chip sampling and soils have been completed. However, rock chips are pretty exciting looking numbers, with 5 and 6% copper, 8 to 9 grams per tonne gold, and up to 27 grams per tonne silver. That's a secondary target to Rocky, but is still within our exploration pipeline. Final slide on our projects is slide 19. This is our Balfour project. It's in the Pilbara. The company originally pegged this tenement for prospectivity for copper, and there's 2 existing copper soil anomalies which would relate and coincide with the VTEM anomaly at each. The company sold this project to Black Canyon, which is a manganese company, for them to explore for manganese for a total consideration of $500,000 worth of Black Canyon shares. Killi, importantly, as part of the sale agreement, Killi retains all copper rights to the project and the ability to explore when ready. And our final slide, our investment proposition is, in summary, we're actively out at the copper gold targets at our Mount Rawdon West project. I was even out there last week mapping. We have an IP survey planned to commence in the coming weeks, with our maiden drill campaign to follow from any IP targets generated from the results of the IP survey. So activity is very high. We're out and about doing what we can. We will have results and news flowing for the coming weeks and months.
Thanks, Kath. Great presentation. Shareholders love a CEO who loves getting out on the ground and kicking the rocks. And I know that's certainly something you enjoy doing. Couple of questions. One's come through in relation to the Goldfields transaction. Why was that so appealing, and how does it set Killi up going forward?
So Killi, when we floated in February 2022, our flagship project was the West Hannaford. That's the project that got us really excited, and a lot of our shareholders came in at that point. It is a very exciting project, and the potential there to find a massive gold system is reasonably high. We found in our first 18 months of operating that costs for a junior associated with exploring in probably one of the last real frontiers in the country were reasonably high. And although we did some really fantastic work and moved all the targets along, it made sense for us to find a partner with that one asset. It's a big project and it needs a lot of involvement. So we decided that we might look for a partner, and we were conveniently approached by Goldfields, and they understood the potential of the project and what it needs. So we'll be working with them for the next 5-6 years to develop the asset.
And importantly, Killi's not letting go of the project, still retains significant hands-on interest, but also an ongoing equity interest.
Yes, absolutely. So the maximum 85% stake in the project, we retain 15%. There's also ability for us to participate in exploration and retain that 15% if we so wish. And there's also a royalty associated with it as well. So by no means are we sold out of that project. We still believe in it and very bullish on finding a new gold deposit. But we understand that for a junior explorer like ourselves, a partner is extremely useful.
And why is Goldfields the perfect partner for this project?
Well, they're able to supply funds. They also understand the region very well. They are a 15% holder in Hamlin Gold, which is our nearest neighbour. They own about 2,200 square kilometres of ground. We're second to them with about 1,600 square k's of tenure. So Goldfields already has knowledge of the region and what they're looking for. So it makes sense that they then had access to a large piece of land as well, which they can bring that knowledge with them.
One of the questions here, it's a good question. When you're listed, obviously with assets in Queensland, assets in WA, you could argue, rightly or wrongly, that sometimes it's hard to focus on where should you be. Does this deal give you focus?
It does. It means that as the project was so large, it did take up a lot of our time and funds. And bringing in Goldfields means that they can focus on all the administrative and tenement management for that project. And we can continue in Queensland, where we've been having some really good success and things have been moving quite quickly over there for both projects. So it really does make things a lot easier for us to focus on exploration and copper and gold, which is what we'd like to focus on for the future.
And from a shareholder point of view, does it also assist with news flow? Shareholders, particularly with smaller cap companies, are focused on news flow. They're focused on results. They're focused on exploration and the outcomes of that. Does this enable the company to lift its exploration focus in Queensland and at the same time drive greater news flow?
Yes, so at the time of float, the Mount Rawdon West project wasn't even granted yet. So we've been moving that along quite quickly in the background from landholder access, etc., to get on the ground. As per news flow, the West Hannaford was somewhat limited with weather events that mean that for 3 to 4 months of the year, you're unable to access the ground. Not to mention there was flow-on effects from damage from such weather events. Last year, we had a few issues where the Halls Creek Fitzroy crossing bridge was washed away, which meant that it was quite difficult for us to gain access. So yes, news flow-wise, access in Queensland is much easier for the company to gain. It's only a flight and a 45-minute drive from Bundaberg to get to the project, which is extremely positive and easy for us to get to.
Final question, funding. So do you have the funds required to drive the Queensland projects forward and fund the exploration that you plan to do?
Yes, we do. So as part of the joint venture arrangement with Goldfields subscribed to $500,000 worth of shares in Killi, supporting our Queensland assets, as well as we raised an additional $1 million dominantly from our existing shareholders. So with $1.5 million will then go towards Mount Rawdon West, which will fund the IP survey, the mapping and surface geochem infilling, and our first maiden program drill campaign at Mount Rawdon. So we're funded for the next 6 months, which is really exciting.
Well, really exciting. A managing director or CEO who likes getting on the ground and kicking the rocks and driving value for shareholders at the ground level. A key partnership locked away and a clear focus on the Queensland assets. Exciting times ahead for Killi. Thanks for your time, Kath.
Thanks for having me, David.
Well, thanks, Kath. And now I'd like to introduce Martin Stein, Chief Financial Officer at Altech Batteries, ASX code ATC. Altech Batteries is commercializing a solid-state sodium chloride battery production facility to produce grid packs for the European grid energy market, and is also at the cutting edge of developing battery materials for a lithium-ion battery future by successfully incorporating silicon in graphite anodes to produce higher energy density batteries. Martin, thanks for your time, and over to you.
Thank you, David. So today's presentation, everyone, is on the Serenergy battery project of Altech. We do have this alumina anodes project, which is also very exciting, but we'll talk about Serenergy today. First of all, I want to talk about the limitations with lithium-ion batteries, and we're seeing these fires because of the liquid electrolyte. We're also seeing that lithium-ion batteries are restricted in their temperature range. They generally operate best between 15 degrees Celsius and 35 degrees Celsius. Outside of that temperature range, the lithium becomes viscous and it loses efficiency and charging capacity. And we know with lithium-ion batteries, just like your mobile phones and other devices, the lithium degrades and the battery runs out quickly. So they have a limited life. Lithium-ion batteries are also at the mercy of the world's raw material supply chains. They use a lot of graphite, with 90% of graphite coming from China, cobalt, manganese, and copper. So is there a battery technology that is completely fire and explosion proof, that has a large temperature range and can operate for more than 15 years, doesn't use lithium, copper, cobalt, graphite, or manganese? Well, this is Altech's battery. It's called the Serenergy sodium chloride solid-state battery, and it uses sodium chloride, which is common table salt, as the main material. And I'll explain how it works later. But the battery was developed by Altech's joint venture partner, which is the world-leading German research and development institute called Fraunhofer. Fraunhofer have done all the R&D work, they've used the salt material, and now the joint venture is commercializing this exciting battery technology. Now, the advantages of this battery are that it doesn't have the viscosity issues of lithium. We can take this battery to minus 40 degrees Celsius to positive 60 degrees Celsius, and it doesn't impact on the operation of the battery. It can be used in any geographical region. We also have a long life because the sodium doesn't degrade like lithium. These batteries go for 15 years and the sodium does not degrade. So let's look at the chemistry here of how this battery works. So you see there the gentleman holding up the ceramic electrolyte. That ceramic electrolyte then has a positive terminal put inside of it, and then the salt, which is the sodium chloride, and nickel powder is put inside that ceramic electrolyte. And then that whole part with the raw materials in it sits inside a stainless steel canister, and the canister acts as the negative part of the terminal. There's a little gap between the ceramic electrolyte and the stainless steel canister. And what happens when we charge the battery is that the sodium leaves the chloride ions stick to the nickel ions, and the sodium ions migrate through the ceramic electrolyte and form a self-forming sodium anode between the stainless steel canister and the ceramic electrolyte. And it is because of this chemistry that the battery doesn't require the lithium, the copper, the cobalt, the graphite, or the manganese. It uses sodium chloride, the table salt, and nickel powder. So when we charge the battery, the sodium ions migrate through the ceramic electrolyte and effectively turn into molten sodium or metal sodium. That's what charges the battery. And then on discharging, it goes the other way. Now, this is a really cool graphic about what Altech is trying to solve here. And it's predominantly to do with how the world is transitioning to renewable energy. The grids are producing so much renewable energy at the moment that the grids can't handle it, and it's literally being discharged to the ground, wasting money. Germany's wasting 2 billion euros per annum. Renewable energy such as solar is intermittent in its production, right? So it doesn't produce it during the nighttime hours, but the grid requires that at nighttime. And we're going to be seeing EVs coming online more and more, likely charging at the night, putting more pressure on the grid to support the power. The solution to this intermittent energy production and to manage the grid and to stabilize the grid is to put massive sea container size batteries onto the grid to store the surplus of the energy and return it to the grid at night time and when the energy is required. That's where the world's heading. As I mentioned before, Altech's joint venture partner Fraunhofer has done all the research and development work. So it's important to note this is not a research and development project. We are now commercializing this technology. You can see there a 5 kilowatt hour working battery module in Fraunhofer's German plant. It's been tested, it's working. They're completely comfortable with the technology, and now we're moving to commercialize it. Fraunhofer is extremely reputable, very credible, being German government institute. Their credibility and reputation are everything. So we can see some of the electrolytes there being sintered at 1600 degrees. There's a final ceramic electrolyte, another 5 kilowatt hour module there. Really exciting technology. That's a small household size battery, but we are targeting the lucrative utility grid market. And how are we doing this? Well, Altech owns 14 hectares of land in the state of Saxony in Germany. This area is being earmarked by Germany as a renewable energy hub. This is what our plant is envisaged to look like. It will be all renewable energy powered. And importantly, the Serenergy battery is 100% recyclable. It can be done on the premises. It's a full cradle to grave product, and it meets all the ESG credentials. This is really the building block of the Serenergy battery. It is the 60 kilowatt hour battery pack. We take 18 of those packs and we put them into a standard 20-foot sea container, and then that can be pre-assembled, delivered to the customer's premises, and within 5 minutes of arriving, it's a very simple plug and play design. The customer can have 1 megawatt hour of battery capacity installed onto their grid to store the energy. These battery packs can also be stacked 3 high, which reduces the carbon footprint. Now, in March 2024, so very recently, we released the definitive feasibility for this study with very pleasing economics. It has 109 million euro per annum revenue, a net present value of 169 million euro, and it has a EBITDA of 51 million euros per annum. So this is on the first train of the joint venture, which is a 120 megawatt hour plant to be built. The vision for the joint venture in the company is to go gigawatts, and the profitability will increase with scale of production. But in the first stage, 120 megawatt hour plant, we've demonstrated pleasing economics. So now the joint venture is pushing forward really hard on securing the sales and securing the finance to construct this plant. We can see there some of the alumina being mixed. That is used to create the ceramic electrolytes. We can see it there being sintered at 1600 degrees to get all the moisture out. And we can see there some testing for cracks or faults within the electrolyte. The ceramic electrolyte there is being put into the stainless steel shimmy. That is then placed into the stainless steel canister, and there we have a 250 watt cell, about the same capacity as a standard residential solar panel, 250 watts. We see there some nickel granules and sodium chloride being poured into the electrolyte within the cell being welded closed there. This is all done at Fraunhofer's premises when they've done the R&D. And there's some thermal testing done on the battery at Fraunhofer's premises. They've spent 35 million euros on the pilot plant and 25 million euros developing the product. So, ladies and gentlemen, this grid storage battery industry is a niche market. It's nascent. It's growing at 28% compound annual growth rate. Tesla's made the statement that they will have the greatest part of their battery business will be from grid storage over EVs. It's a very exciting industry. We believe we're in the right time at the right place, and we welcome you all to be part of the grid storage battery future. Thank Thanks very much, David.
Thanks, Martin. Great presentation. Quite a few questions. Some of them are technical, so I will apologise. But we'll start with hopefully an easy one. The Serenergy battery, unlike lithium-ion batteries, doesn't, as you say, have any lithium, copper, cobalt, graphite, or manganese. What's your opinion on the importance of this?
I think it's very important, David. One is that we don't rely on raw materials and price fluctuations from other countries. For example, copper from Chile, lithium from Australia, graphite from China. China controls the graphite market. They produce 90% of the world's graphite. Now, not relying on any of those raw materials really de-risks this product for countries. And when we're talking about energy security, especially in Germany, where they've been spooked by the Ukrainian invasion by Russia, Russia turning off the gas pipes that lead into Germany. Germany's learnt the lesson, and I think it's an important lesson for the rest of the world as well. It's very risky on putting your energy storage reliance in the hands of raw materials from other countries. So to have sodium chloride as the main ingredient, salt, which is readily available, $30 US a ton, it's in every country's backyard. I think it's very important for energy security.
And what about competitors? Who are your competitors or main competitors in this space?
So the main competitor is Tesla. They have what they call a Megapack, which is a very similar design, the sea container design. They're the leaders in the market at the moment, but of course that product is a lithium battery technology that uses all those raw materials and has the inherent risks that lithium batteries do.
And what about the future plans for Serenergy battery? What are they, and what should investors be focusing on?
Okay. Well, first of all, David, I'd like to give an example of where the industry is headed. It is the future of the renewable energy transition. A couple of weeks ago, the state of California, which is the world leader in renewable energy production, their grid for the state, for the first time ever, the greatest source of energy came from not the usual sources like nuclear or gas or renewables or fossil fuels. The biggest source of energy was 6 gigawatt hours of power coming from grid storage batteries that supported the grid one evening. And that's an indication of, I think, where the world's headed. Now, where we want to go is, first of all, we need to prove up the product at a commercial quantity in Germany at the 120 megawatt hour capacity. We've selected all of our key suppliers, some of the world's best robotic and engineering companies that come from the automobile industry in Germany. We think we've assembled a team that has the credentials, has the skills, has the knowledge to turn this 120 megawatt hour plant into a success. Now, the strategy is, as soon as we raise the finance to construct the plant for the 120 megawatt hours, we'll turn our attention to gigawatts or 4 gigawatt hour capacity. And then we have the worldwide rights to license, manufacture, and distribute this product all around the world. So we will turn our attention to going gigawatts and gigawatts globally.
There's some really good questions here from very well-educated, I assume, shareholders, so they must have your stock on their watch list. How much electricity will one of the massive container-sized batteries store, and what are the hours to discharge for how many homes and cars? I'm not sure if that's an answer you've got readily available, but certainly I'll put it to you.
Yeah, it's a really good question, and it's quite complicated to answer the second part of it because it depends on the homes and the residential uses and what they require. But I can tell you for the first part of the question, this is a 1 megawatt hour capacity battery. So there's 1 megawatt hour of power that can be stored in that battery and then returned to the grid. The C rate for this battery, which really is a statistic that recognizes how quickly the battery can charge and discharge. The C rate is about 0.25, which means that this battery can be fully discharged in 4 hours and fully charged in 4 hours, which is ideal for stabilizing the power supply to the grids.
How much interest have you received for large-scale commercial use of the large storage battery packs? And the question here, could you give examples of potential clients, and when do you think commercial sales may begin?
Yeah, so we're in discussions with German utility providers. We have a list of about 20 utility providers that we think are suitable customers. We're targeting the top two at the moment, which are German utility providers that are transitioning from transitioning from fossil fuel energy to renewable energy. They're using lignite coal, brown coal at the moment to provide their energy. And with the regulations that Europe and Germany has put in place to go all renewables, Germany wants 45% renewable energy by 2030. The onus is on utility providers to make the transition to renewables. So we're confident that one or two of those German utility providers will take the 5-year offtake for the 120 megawatt hour plant. That will assist in the financing, and then we can look at the second train of the joint venture, which is the gigawatts. We're also receiving a lot of interest from the Middle East because of the temperature ability of our battery to operate in temperature ranges to positive 60. So that is another region that we're expressing a lot of interest with. And also the USA has the Inflation Reduction Act that they introduced last year, which is putting a lot of money into renewable energy. And in fact, the biggest amount from the IRA is earmarked for grid storage and batteries. So that is another potential region that we will target. But first of all, we will get the offtake within Germany from a German utility provider and then take it from there.
Last question, $1 million question or multi-million-dollar question, depending on how you look at it. Finance. How much is required and how easy do you think it will be to access?
Okay, well, that's a very good question. And that is what we're really focusing on now at the moment. I touched on in the presentation that we're in full drive now to get the finance since we released the financials in March of this year. We're looking at a combination of project equity. We're looking at green bonds for debt in Europe. And we are also looking at grants and subsidies that the European Investment Bank and the German state and federal government is looking to support these sorts of green projects within Europe. So we're looking at a mix. It could come from a combination of all three. It could come from a large chunk of equity in the project, but we're looking at a few different avenues for that. And within the next few weeks, we should make some appointments with, and the ASX will be advised of this, some appointments with some globally leading financiers that will assist us in securing the finance for the project.
Certainly a world interesting project and globally significant on a number of levels. We look forward to following the Altech story and how you look to achieve the outcomes you're poised to follow through on. So Martin, a great presentation, and like I said, a technology that is going to grab global interest, and we look forward to following with interest. Thanks for your time.
Thank you very much, David, and thanks to all the listeners for tuning in. Really appreciate it.
Thanks, Martin. Now I'd like to introduce our last presenters, John Hannaford, Chairman of Forrestania Resources, ASX code FRS, and Joshua Letcher, who is one of the vendors for the project that Forrestania has just optioned, who will be a co-presenter with John today. Forrestania recently entered into an option agreement that provides it with access to iron ore tenements in the Yilgarn region of Western Australia. A transaction, I should say, that has clearly caught the market's attention. And a number of you I know who are on the watch list today have this stock on your watch list and are watching it with interest. Joshua, over to you.
Thanks, David. Much appreciated. Thank you, everybody, for your attention. As you say, it has caught the market interest, and I think the market and the company itself are on the same page in terms of why it's an attractive project. Just move on to the next slide, thanks. And the next one. So we'll spend a bit of time on this slide. I mean, this really says it all for us. Iron ore is all about infrastructure. This region has been historically quite a long-standing producer of hematite from the Yilgarn. Previously, we had Portman, followed by Cleveland Cliffs. Originally, it was Western Mining. And most recently, Mineral Resources moved in there, upgraded the rail line to Esperance, and the port facilities have been upgraded. So they've been running at 10 million tonnes. Capacity is 11 million tonnes a year. MinRes has, I think, moved its focus now to more up near Onslow because they've got big resources there. And so there's a really, really good opportunity for us to bolt on to the existing infrastructure that's there. And obviously, we're right next to the Mineral Resources operations and pits, which we'll show you. In terms of Forrestania, it's a deal which allows us to, as an option, allows us to drill and drill test some of the targets. Some of the targets are buried and so not exactly present to surface. We drilled during the option period to test the targets, and we're well on the way to starting that drilling program. So very exciting times for us. Gets a real step change opportunity, but I think that the real thing is we can graduate to an explorer, developer to producer within a very short time frame. Next slide, thanks. This is the deal terms. As I said, it's an option fee. We on exercising the option, which will be later in the year, we will be issuing both shares and some of the listed option series we have, and then performance rights, which is again why we believe it's a good alignment of vendors and the company, because they're, as you know, with iron ore, the bulk tonnages mean a lot of potential revenue, and we're aligned with vendors in terms of trying to seek a large resource of hematite. Next slide. So I'll let Josh, you can jump in at any time, but we've been presenting this for a couple of weeks or so at the moment, so we both sort of go in and out. But basically, the current situation with Mineral Resources Yilgarn Hub, as you can see, a lot of the satellite deposits are a good road distance from their main infrastructure. They bought up a number of other companies' deposits in the area, and they have been mined and producing various tonnages. But the double handling with the rail and road transport has added to, I suppose, the cost disadvantage compared with their original asset right near the railhead at Killi. So from our perspective, we think the location is everything, and also just what we think are some significant targets of hematite. Next slide. And I'll spend a bit of time on this slide. This sort of shows really in a bit more detail some of the just the location and logistics that the projects present. Netley, the company, owns the northern tenement there and has the iron ore rights, mining rights to the southern tenements, and has done a fair amount of work on the ground. But I think the key for us is the targets they've identified. What we've announced to date is really in relation to the southern target. That's the area boxed off in red with the yellow target areas on it. We'll get to that shortly. This is our largest target, but it's also some very proximal targets, what we call the north and the northwest target, which we will bring some more news to market in the next couple of days or week. But they present very near-term opportunities for us to partner up with potentially MinRes, or alternatively just drill our own target area. A lot of the work done by the Netley group involves some very advanced technical targeting, and that's been really where with a lot of the work has been done. That's been matched up with on the ground geochemistry and geophysics, and some of the targets that from previous explorers and producers in the area had identified. So we feel very confident that there's a good correlation of those targets, and we've seen some significant target areas at depth.
Just touching on the history of this area. So these 3 tenements were owned by about 17, 18 different parties from the late 1990s through to now. And so we've actually packaged up a lot of the ground that hasn't been explored for iron ore. A lot of those companies did include cliffs as well as a portion of this area. But individual holders, Michael Killi was one of the more recent ones just before we took over the ground. Western Areas, Rosebery Holdings, Semi Resources, Peter Aaron Banks, Burmese Operations, and a whole list of others. It's key to note that the exploration outside of the MinRes tenure and their mining license hasn't been focused to date on other things outside of gold, nickel, copper, that sort of things that the Yilgarn and Creighton is quite popular for. So we're essentially one of the first explorers for iron in these areas, which has been quite significant in terms of what we think we've discovered and what we're progressing through exploration at the moment.
Next slide.
Did you want me to touch on this one, John?
Yeah.
Yeah. So the southern target's one of our more exciting targets. There's a BIF in the northern area which stands out. It's only a very small BIF, about 5 meters thereabouts, and the rest of this target is all undercover. So it ranges from very shallow coverage where there's some sort of occurrences of rock chips and outcropping at surface, through to having no access to rock chips at surface where it's completely undercover. We do estimate that most of this is sort of around the 10 meters of cover, which is quite exciting. High magnetic signature going, the full 6 kilometers strike. And along there, we've identified a number of pockets which are on the edges of the magnetic highs or in between multiple magnetic highs, which is a good indication of potential for hematite. So that's the main target is obviously for hematite, which is what the MinRes plant is designed to process, and what is a little bit more simple in the market to progress as a target.
Next slide, thanks.
Some of the earlier exploration, once we did our initial desktop studies, included the soil PXRF sampling, and that's helped to distinguish sort of the nearer surface anomalies along this range. In addition to that, we followed through with trying to find some rock chip samples. We were able to find a couple good hematite rock chip samples, which we've recently released to the market through Forrestania, and that's sort of confirms the presence of hematite in the northern areas as well as through to the south areas, which is quite exciting. It's just building on the data layers that we're compiling to be able to focus on drill target locations.
I'm conscious of time. I really want to try and focus on the current work and the upcoming news flow. As we've said here, the multiple shallow targets. Let's move on to the next slide, which shows just the overlay of all the data. As you can see, very good correlation between the magnetics, the targeting, the rock chips, and the other soils. So we've got our drill targets already defined, and we've got POWs over those targets already. I'll just slip to the next slide. Probably most pertinent for investors is just what the current plan is, and again, one of the things we really liked about Josh and the team, they were really hitting the ground running. A lot of the preparation work has been done. The heritage agreement had been negotiated a while ago and completed. The POW had been submitted and approved. The site visit rock chips, we announced those last week, which was very positive. Heritage survey, I think, is just about to complete or has completed, so we're not anticipating anything from that, but that will allow us to commence the first drilling program, which will comprise at least a dozen holes, we think, over the 3 target areas. We do have 24 locations to choose from. Assays, we'll be able to see fairly quickly at site, positive but confirmatory assays probably a month after drilling, maybe 6 weeks. And at that point, we'll know the validity and extent of some of these targets, which we believe can be quite extensive. So very short timetable and a lot happening. We do have some more geophysics and targeting work that the guys have been working up with maps and things that we're hoping to finalise to release in the next few days, which again is very positive. Josh, did you want to talk to any of that?
Yeah, I think the initial drill program, which is part of the due diligence drilling program, focusing on just intersecting these targets at depth. As we do that, we'll look to progress the drill planning for a full drill out and sort of complete that, as well as the additional heritage surveys and POWs. So come sort of September, as we're getting some lab results, the company's well positioned to hit the ground running with a larger drill program and sort of drill it out. Yeah.
Yeah. Next slide, thanks. I think we can probably page through the next couple. Dave, I know you got a few questions there, but clearly been a long history, and the railway, it's railway and port is third-party infrastructure. It's not related to MinRes, so there's an opportunity for us to be separate. We're not beholden to MinRes by any stretch. We do have good relations, and both Forrestania previously, but also Josh and the Netley team has been in quite regular discussion with MinRes, so that door's open. But we don't want to be in a situation where we're beholden to them. So again, Josh has done a good job with the guys in forging a fairly independent pathway potentially. But obviously, if there's something to do and it makes sense, then we certainly look at it. But the potential here and the objective is really to establish a multi-decade resource inventory, resource inventory to support a multi-decade bulk mining operation and production and shipping through Esperance, or those other options as well. And that should support, we think, a significant opportunity for shareholders and investors. We've had some really positive meetings with some quite large strategic groups and significant family office type investors, and so that's been a really positive to that they're seeing this opportunity as we are as being a real step change opportunity for the company, but also to fast track a major development. Next slide. That's just talking more about the port. Anyone's been down to Esperance, there's a significant expansion that has been put in, and there's also potential to, and the government I think is penciling in further expansion, and we've got a very receptive environment for some of the authorities with some. I think the nickel has been halted, the nickel being shipped out of there from First Quantum, and with MinRes getting towards the end of their life, we see a very receptive environment for getting approvals and underpinning a new development and production program. David, I know we've sort of run through things pretty quickly, but do you want to open up to some questions?
Thanks, John. Thanks, Josh. A transformational presentation. A couple of leading questions here, so I'll jump straight into it. We don't try to hide from the hard ones. What does the executive look like going forward, should this transaction proceed? Do you have a plan for essentially who's going to run the business moving forward?
Yeah, it's a good question. It's something that we're having you know, a lot of discussion on. At the moment, we have a lot of hands on deck, I think, where Josh has been and his geologist Luke Marshall been very involved, and that's working very well at the moment. We obviously are halfway through the transaction, so you know, we see a different executive probably post transaction, and you know, we haven't landed on it as yet, but we also you know, we're working well together, so it's not like there's a new team necessarily, but you know, we're very pleased with the way that's gone so far. You know, we're all shoulders to the wheel, and there's lots to do, so keeping very busy. But yes, we'll see some changes as we evolve and potentially complete the transaction. There's a few changes to board probably as part of that. Nearly have the right to one, potentially two directors, but it just depends on the use of the best people to our disposal, and you know, how it all lays out from there.
And in terms of the tenements themselves, and you touched on it briefly, Josh, why have they not been properly explored previously?
Yeah, so most of the exploration activity that we can see on GeoView and open data is looking at lithium, or it's looking at gold. There's also, you know, some assays for other minerals, nickel, copper, but so far there hasn't been anything for iron outside of the MinRes area. There is a little bit of new drill hole data that's starting to come out. So maybe over the next, you know, bit of time, we might see a little bit of more data becoming open.
Yeah,
Are you surprised that this tenement package was available, given how prospective it is for iron ore?
For us, it's quite interesting that no one had sort of wrapped it up. I think we assumed that MinRes had already, you know, had data on explored for the area for iron, and you know, that was our assumption. I assume that was everybody else's assumption, that the iron was already sort of wrapped up and they had it, but it doesn't seem to be that case. The drill bit will confirm shortly, but yeah, it looks like, you know, we've sort of had a nice win here.
David, can I just add to that? Sorry, there's a couple of things as well. It's just before, I mean, Netley Associates had the tenements before MinRes was even in the area. So, you know, that back to the Cleveland Cliffs days, they're very much in production mode. And a lot of the previous banded iron formation targets or prospects, they were sitting out of the ground, like they had these raised formations. This is underground, so it's a different type of target, and so that probably why there hasn't been this level of exploration, and it would have gone back, you know, a few decades when that was being looked at by, say, Portman or others.
Do you start looking at scale, and do you have a view on, you know, the potential scale of the target area you're dealing with?
Yeah, there's three different targets. So the south target is the one that we're focused on currently. We're just wrapping up a bit of information to put a bit more info out to the market on the northern targets. You know, we've got a 6 kilometre strike on the south target. There's a northeast potential of about 4.5 kilometre strike. And then there's a smaller northwest target, which is in the low kilometre sort of range, but good for near-term potential. Depths, we are currently doing mag inversion down to, say, 300 metres, which is sort of what's capable for open pit. And, you know, from that, we'll have a better understanding, a more accurate understanding of the expectations of the sort of deeper potentials there, as well as with the drilling that should start in early July.
Just, David, on that, I mean, we can't talk about exploration targets, but it's in the several 100 million tonnes collectively. You just got to look at the the performance rights hurdles that obviously the vendors are comfortable that hurdle is quite a significant one. So obviously, as Josh says, the truth's in the drill bit, but the targets themselves, we believe, are quite substantial.
And when do you think, there's a question here in terms of drilling, when do you think assays will start coming out? So when do you think the truth doctor will start giving us the answers that all the shareholders are waiting for?
Yeah, so in terms of the heritage, we've got to get that final report in. Everything's currently looking good. We should have that around the end of the month. Drilling commencing straight away. We've had no issues with drill rigs. There's several rigs ready to go to site if we tell them to. And at the moment, that sort of indicates as well the labs are not as full as they have been because a lot of drill rigs are sitting around. So we expect sort of 1 to 2 months time. So around late August, we should have some lab results, but we'll also have a mag sus meter to be able to confirm hematite or not on site, as well as a couple other handheld devices, PXRF, to be able to get some initial readings as an indication of iron before the lab assays come in. So, start of next month, around there through to mid next month, we should have some initial readings. Yeah, we might even do a live feed to the first drill hole.
Now, some very knowledgeable shareholders here. What is the remaining iron ore inventory, if you know it, in the Yilgarn hub controlled by MinRes?
There's a few research papers that are out by Morgan Stanley, Bell Potter, I believe it is. And also, from what we can see on the public domain, when they acquired the project in 2018, upgraded it in 2020 to 11 million tonne per annum. They had about 46 million tonnes. Since then, they've acquired a couple other of the small satellite projects, but it'll be our understanding that most of those have been mined out to date. So, not a lot of tonnes left.
And there's probably the next part of that question. And have you been in any discussions with MinRes, and do they have a contingency should they run out of ore?
I think their contingency, my personal view, is they're focused on Onslow. I think if there was some ore to be found around Koolyanobbing, they would potentially be interested. Those are discussions that we'll raise with MinRes, depending on the drill results. We have been in contact with them for about 1.5 years, and the relationship there is good. So we'll see what the drill results come in, and then we'll take it from there.
Now, this is clearly a crystal ball gazing exercise, so I'm not asking you to give any forward-looking statements, but should a discovery be made and should iron ore of a scale be found, what would it actually mean for the region in terms of current infrastructure, rail and port?
Yeah, there's probably more to that as well. So if we look at the jobs, there's about 1,000 jobs now. When MinRes took it over, there was about 400. A large portion of those 1,000 jobs live in Southern Cross. So, for the region, it means, a large portion of the population there remains employed. So, there's that aspect. Then there's, the port and rail infrastructure. There's not a lot going on that rail at the moment. So, keeping ore flowing would be good for the rail infrastructure. And, that leads down to maintenance and whatnot on the line, as well as port operations and port jobs and infrastructure in Esperance as well. So it's quite a significant project for Western Australia. If there was, a shortage or no more iron ore in the area, I think it would be quite devastating for the southern area from Koolyanobbing all the way down to Esperance.
Final question, funding. What does funding look like now, and how does that progress the project forward and the exploration activities planned?
Yeah, from Netlay's side, Forrestania has enough funding to complete the initial DD drilling, which will confirm if we've got hematite depth or not. From there, we'll look at a larger drill program. Obviously, that costs a bit more to do. If we intersect, we would be quite confident we could potentially get some non-dilutive funding by essentially doing a transaction with Mineral Resources, for example. Given they have the infrastructure in the area, that makes sense. Otherwise, once we've confirmed hematite at depth, then we might look at doing some more funding. I don't know if John wants to add to that one.
Yeah, I agree. We're funded through this initial program, and that was the same when we entered into the project. And obviously, there's a lot of different ways that can go on a success basis. So we're confident that we're on the right track, and then you're getting into a resource sort of exploration drilling, and it's a different kettle of fish.
So just on that, last question for you, Josh. Subject to drilling, of course, how quickly could Forrestania delineate a resource of this project should the results come out as hoped?
Yeah, very, very quick. So the south target will be the main area to progress with a rig down there. We will test the other two targets, putting a hole there. If we get positive results, we're likely to have multiple rigs on site. The initial program's RC. Throughout the course of the program, we'll look at doing some DD as well. But it's relatively fast drilling, targeting the top 90 meters or 90-meter holes, top 60 meters depth. So, near surface and quick to mining potential as well.
Well, thanks, gents. Clearly a potentially transformational project in a fantastic jurisdiction that is crying out for iron ore, and as you said, has all the infrastructure advantages already in place, and clearly the attention will be on the work of Forrestania as it looks to conduct its due diligence on this project, and subject to successful due diligence, take the project forward. So Josh, John, thanks for your time.
Thanks very much, David. Thanks, everybody.
As I said in my introduction, the purpose of this webinar series is to give you the opportunity to engage directly with companies that are on your watch list, and to give you ideas of companies you might want to potentially add to your watch list to follow in the future. So look at your watch list. Let us know. Are there any companies on there that you want to hear from? Or let us know about companies you've been thinking about adding to your watch list, but you would like to hear from. Thanks to all of our presenters today. Thank you for watching. Look forward to seeing you in a few weeks' time. Have a great day.